Yes, you're seeing this right. This is the current chart for Google year to date. They're up about 65%, which is a total of about $125. So it brings the question, is Google currently overvalued? Now, there has been a lot of talk in the stock market about Google winning the race against Nvidia, and even Nvidia themselves took out a tweet about Google and their AI, which we're going to be taking a look at a little bit later in the video. So let's go ahead and take a look at Google's financials. Let's see if this would be a good investment to our portfolios, and let's find out what the intrinsic value could be. Now, before we get into that, let's go ahead and see the current sentiment of Wall Street about Google stock. As you can see, out of a buy rating of 5, Google is currently a strong buy at 4.53. This is based on 65 analysts in the past 90 days with 44 strong buys, 12 buys, 9 holds with no sells or strong sells. Now, if we take a look at the company's most recent earning, you can see they beat both on EPS and revenue. And if we take a look at their annual EPS estimates compared to their revenue as well, at the end of December 2025, which is what we're going to be at right now, the EPS are going to be 10.52 with a forward PE of 30, and then by next year, December 2026, EPS will increase to 11.15 and the forward PE will decrease to 28.33. This is good. More EPS, you're paying less for the company. We just got to see and wait what the stock price will be then. And also for the annual revenue on December 2025, again, the time that we are now, revenue estimate is going to be about 400 billion, and for the same time next year, estimates is going to be 454 billion, about a $54 billion increase. This is the tweet that was taken out by Nvidia. We're delighted by Google's success. They've made a great advances in AI, and we continue to supply to Google. Nvidia is a generation ahead of the industry. It's the only platform that runs every AI model and does it everywhere computing is done. Nvidia offers greater performance, versatility, and fungibility, I don't even know how to pronounce that word, which are designed for specific AI frameworks or functions. Now, this was taken out after articles like this have been going out. So it brings me the question, why is Nvidia telling people that we are better than Google, even though Google is still taking out an AI? Like, if you're better than somebody, you don't really have to say it unless you know there's some sort of risk to the competition and you want to sort of like calm your investors down or calm. It really doesn't make any sense to me. I mean, if you compare, for example, to sports, there aren't many players that are the best. For example, you don't see LeBron James saying, oh, I'm better than Curry or something like that, if you get sort of the reference I'm trying to make. Usually the best just do their job and they're still the best, which Nvidia is showing it in their last earnings report. So why take out a tweet like this dedicated directly after Google talks about, or the market is talking about, Google winning the AI race against Nvidia? It really doesn't make a lot of sense to me, but I guess we're going to find out in the future who really wins the race. Now, this isn't the intrinsic value we're going to be taking a look at. It's going to be something similar, but this gray line here is usually the intrinsic value that Google is going to be based, and then the color graph right here, green or red, is going to be the price. If it's below the green line, it's going to be green because you're supposed to be buying under the intrinsic value. If it's over, it's red. As you can see, it's probably the most overvalued Google has been in a long time. Now, if we take a look at some fundamental analysis comparing the EPS to the stock price, if you've seen the channel before, I like to buy when there's divergence, meaning that the EPS are increasing, like for example right here, and the stock price was not following that. This is where I was buying personally Google around here. I think, yes, the price was about $150. That was my average cost. I thought the intrinsic value of Google at the time was 200, and I sold all my shares at about a $202 stock price. That's not the intrinsic value we're going to be taking a look at. We're going to see that in a second. But as you can see right now, there's no divergence. Google is in line with its earnings. So unless this company starts dropping down a lot in price and the earnings keep increasing, I don't think I'm going to reinvest back into this company. But who knows? We're going to see in the future. Now, if we take a look at the overall financial, I mean, guys, Google, it's a beautiful company. Revenue's up 14%. Operating income is up 29%. Net income is up 36%. Free cash flow is up 5%. And even if we click this button here, by the way, if you want to use this software, it's in the link below. You can check out your stocks. You could get 3 stocks for free. You don't even have to pay the membership. If we adjust for inflation, meaning you discount inflation, revenue is still up 9%, operating income is still up 24%, net income is still up at the 30% mark, and free cash flow is still positive. Guys, keep in mind, free cash flow is a little bit low, but Google is investing a lot in AI. Now, obviously, you want to invest in a company that has more assets and liabilities. I mean, look at this beautiful 536 billion assets, only 149 billion in liabilities. This is just absolutely amazing with such a huge company. And again, if we take a look at how efficient they're using their cash, the free cash flow margin is at 19% with a conversion rate of 59, and every other single metric for this company, I mean, gross margin at 59%, operating margin at 32%, net margin at 32%, 42%. Usually guys, when you're investing in a company that you want it to perform well in the future, if the gross margin is over 40%, that's a check. The net margin over 20% is just absolutely beautiful. But I mean, this company is just beating every single metric. Now again, this isn't the intrinsic value we're going to look at in this video. This is just what analysts are forecasting this stock to be worth. The lowest forecast is about $186, with the average being $309 and the highest forecast of $367. This is not going to be the same analyst for Seeking Alpha, so let's go ahead and take a look at Google's stock forecast price in Seeking Alpha so we could compare the differences. Now, as you can see, is very similar. The lowest end at a 145, the average at 326, but the highest on this one is 432. Again, going back to this, you can see there's still a little bit of a difference. Google does pay a dividend. They have a 0.26 dividend yield, which is about 82 cents per share. And surprisingly enough, Google does have a buyback program of 1.52%. This means the company might think their stock is undervalued, and they're buying back the shares, but I'm assuming this was back then the stock price was around $150, $170. I don't think they're buying back more shares at the $300 mark, which is the current stock price. And if we take a look at some of the competition, I mean, every other Mag 7 company is pretty much overvalued. I think the one that's the least overvalued might be Meta and Salesforce. Again, the stock market S&P 500 overall is considered quote unquote to be overvalued, but isn't it always overvalued and then it beats the high again? I mean, it is what it is. So now what you've all been waiting for, let's go ahead and take a look at the intrinsic value. Now, as you can see, based on the intrinsic value, I know a lot of you guys scared right now, and if you're investing in Google, you just want to sell everything. Guys, please do your own research, have your own opinion. Don't invest based on somebody else's opinion or what this calculation gives you. If you invested in Google or if you didn't, I'm sure you had a good reason for it. But the base case for Google is that the stock price could be worth $178. That means the stock is currently overvalued at 43%. The worst case, the stock is overvalued by 59%, meaning the stock price is about $128. And then the best case scenario, the stock is still overvalued at 10%, meaning the stock is worth $285. Now, I know you shouldn't always invest based on the intrinsic value, but this usually gives you a pretty good idea. At least that's how I like to invest. I want to have some cushion, some safety, just in case something goes wrong. I don't lose a lot of my capital. But like I said, I invested in Google when it was around $150, and I don't think I'm going to be investing at these prices. I don't even think I'm going to be investing around $250. But again, we just have to wait and see what happens. I might be wrong. Do you guys think Google is currently overvalued? I know there's a lot of talk in the stock market. Some people say it's not. Some people say it is. There's a lot of conversation, so I want to hear your thoughts. Guys, if you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next video.